Definitely, definitely. No, man, I appreciate that, and man, that's good stuff. It's good to know that I'm not the only one in the club when it comes to that type of thing, man. That's really cool.
Yeah.
Yeah, awesome. Well, man, let's go ahead and get started. We're going to do the Breakout Power Hour. We're doing a special edition. We normally come on Tuesdays at noon. But yesterday, of course, with fall break going on, that adjusted my schedule. And then I had a breakout at my office that I had to deal with. So I'll tell you some more about that. But we're going to go ahead and get this thing started. Let's do it. Shout out to Carolyn. Shout out to Sean. Shout out to Kimberly. Everybody listen to this on the replay. Everybody listen to this on the Minding Your Business podcast. This is Puffy, Mase, Carl Thomas, been around the world. Tell it to your face, boo, not behind your back. Cash talk slick, we never mind that. Funny, never find that. Puff dime sacks, right? Hot stuff that make people say rewind that. People know you go against the Harlem Gigolo. Get liquor low, make the girl trick your dough. I represent honeys with money, fly guys and gents. Ride with the tents, that be 35%. All right, so we're here doing this on a Wednesday, October the 12th of 2022, man. Glad to be here with all of you. Shout out to those of you, again, that are listening on the Minding Your Business podcast, entrepreneurship, real estate, trending news. There's no business like minding your own. You can check that out. Of course, you can go to my business card, which has all my links, and that's a way to get connected with the podcast. If you're like these great folks on BreakOut and you want to join BreakOut, there's a link there for you to do just that. All of it at champ10k.com. That's the easiest way to connect if you want to schedule time to help kind of go through your business and help get your business in the right direction. If you're looking for ways to kind of fund your business, of course, in these times where it's really tough to do that sometimes, I love to be a resource for that. And of course, if you want to connect with me, with my company, River City Capital, you can do that there. If you're in the real estate business or interested in getting in the real estate business, I've got resources all there. So it's kind of a one-stop shop for you right there at champ10k.com. We've got some great peeps here in the room on BreakOut, Carolyn, Sean, Kimberly, and others that are going to join, I'm sure. But let's get right into it. So this is kind of more of a special edition since we're a little bit off schedule, but what I want to get into, and I want to get some thoughts and ideas from everybody, but let me go ahead and kind of set the stage real quick. So with River City Capital, we provide low-cost loan funding for small business owners in kind of underserved and disinvested areas of Memphis, Tennessee, which is where I reside. We also provide technical assistance for those business owners that are here. And one of the things that I do as serving as president and CEO of the organization is I'm always kind of reviewing our loan application process and what's that experience look like, right, for the applicant. And actually along with, kind of founding River City Capital, I was a banker for 19 years. And so I always got, kind of feedback and always was, want to voice my opinion on how we can improve the loan application process and just create a better experience for in this case, the business owner. And I'm always looking for ways to, how can I get to a decision as expeditiously as possible, right? And take a lot of the BS and the fluff out of the loan application process and having to, put your right arm as collateral and all that type of thing, right? How can we improve that here at River City Capital? So I wanted to come on in this room, and for those of you that are on the podcast, you can email me, Ron at themybpodcast.com. That's Ron at themybpodcast.com. You can email me if you've got thoughts and opinions on what you hear today. But so anyway, right before I open up the floor, what I'd like to engage is I'd love to hear some thoughts from some folks as to what's been your experience in applying for loans whenever you've done so, whether it's a mortgage, especially if it's been for your business. I'd love to hear that, or just for anything that you've done. What's kind of been your overall experience? What do you like about it? What do you dislike about it? And And then also, what would be some areas that you'd like to see improved around that whole process. And what I like to be able to do with this is kind of take it back and kind of, maybe take some of the thoughts and ideas and be able to implement them in my business such that we can, again, just really improve that process, which we do online through our website and that sort of thing. But want to be able to improve that process. So anyone that's here in the room on Breakout, either Carolyn, Sean, or Kimberly, I'm going to open the floor if you want to jump in and share your thoughts on that.
Hey, Ron, just a quick thought. In my history in building a business, I found that when I really needed the funds, like when I was pre-revenue, going into a launch of a business where I really needed it, it was very difficult to find. And then when I had revenue coming in and I had good cash flow, then so many of the financial institutions were reaching out to me trying to get me funding. You know what I mean? So it was a definitely early challenge as an entrepreneur trying to start a business. When you're going to these financial institutions saying, hey, I'm pre-revenue, but I have a great idea, I have a great team, and we're going to launch. And so that was probably the hardest thing. They're like, well, we're going to wait until you get revenue, wait till you get started before we're willing to risk the funds on funding.
Yeah, Sean, that's, I've heard that all too often. I appreciate that early feedback because I think that helps set the stage as well, that oftentimes the old adage is the bank is willing to provide you a umbrella, but not when it's raining, but just when the sun's out. on a sunny day with no clouds, they're willing to provide you the umbrella. And that's where, when we founded River City Capital, Sean, we had actually that in mind, that how do we debunk that, right? And as a CDFI or a community development financial institution, how can we kind of debunk that? And so we work with actually primarily startup businesses. Many of those businesses are within their first 2 years. And Sean, you hit the nail on the head. They're kind of pre-revenue, type businesses. They're great ideas, things of that nature. And, we provide funding for them, again, in kind of that low cost, type environment. Low cost meaning our max rate for us is 8%. So we don't go above 8%. We're typically in that range of 4 to 8%. So even in this environment of rising interest rates, we tend to kind of keep our rates fixed. And the whole idea is about helping some of those folks that are underserved in these disinvested areas. And so, no, you hit the nail on the head, man. I love that share.
Yeah, that's a really good rate that you've been able to do. And it solves a big need for businesses, that's their lifeline to get started, and they're not having to pay the 12 to 18% is generally where some of these small businesses have to turn to in order to get funding, because it's a higher risk when they're first starting. So the fact that you're coming in at that lower interest rate is a huge, problem that you're solving for these businesses.
Yeah, no, absolutely, Sean. And the other piece of that, to add to what you're saying, is not only do we keep the rates low, but we keep our kind of the repayment pieces flexible. So as an example, what we do is, of course, you can do your straight kind of monthly payment amortization, right? But we do offer, 6 months interest only. Yeah, we do offer that with our business owners. We kind of provide our customers the option. Essentially, you can start repaying immediately, right? You can do what I just mentioned, which is the kind of 6 months where you just pay the interest, no principal. And then we also have an option where you can just delay the payments altogether for 6 months. And it may be obvious, but and Sean, you may agree that sometimes you need a little bit of that runway, right? Like, get access to the funds, but if you're not having to start repayment like right immediately, a lot of our contractors love that. Where they're able to get funds and then they don't have to make a payment for, say up to 6 months. Now the interest still accrues, of course, but they're not having to make the payment. So from a cash flow standpoint, they get access to the funds without having that immediate hit to the cost. So it reduces the stress of having to cash flow the debt, and they can focus that attention on actually doing the business to begin with. Right. And so, we're in a position where we can do that because, we're a smaller kind of streamlined organization. We're not a depository, right? So we don't have branches, and I don't have all these salaries I've got to pay, right? I don't have tellers and all that type of stuff. So we're a small kind of streamlined company. But no, go ahead, Sean.
Yeah, that's awesome. I think that's a great idea because it's the early stress of starting, or maybe you have some revenue, but it's just getting going, and you're looking at every expense, and you're like, hey, I have pretty good revenue, and in 2 to 3 months from now, this payment's going to be very easy for me to handle, and I'm just going to delay it to 2 months to give me that runway to bring in the revenue in month 3 on billing or whatever it is for their business. I think that's a really good idea.
Yeah, no, absolutely. And so, you're exactly right, Sean. And that's where, not only myself, but there's over 1,300 what's referred to as CDFIs around the country. So there may be one close to your market, and so all of them focus on different things. Some, affordable housing, some small business, and the sort. But for us, we focus on that small business, and so we're able to provide that funding. And you'll also notice that, when I mentioned my organization, obviously we're not segmented by race or any of those type of things. Keep in mind, we work with businesses, again, that serve or kind of reside in kind of low to moderate income or disinvested areas. Right. And so we have a portfolio of people across the gambit, men, women, but mostly a lot of what we see now are women. And that's a rising population around the country, but then certainly here in Memphis. I'll give you a quick example. Actually, and she's turned out to be a friend of mine, her and her husband. She's in the kind of that hospice, kind of home health care business. She was able to get a contract with Shelby County, which makes up kind of Memphis, the greater Memphis area here. So with the Shelby County Aging Commission, she was awarded a $577,000 contract over 3 years. $577,000 over 3 years. It's going to completely change the trajectory of her family. And they've struggled. Some, her and her husband have struggled a little bit. He's in the painting business himself. But they couldn't go to the bank and get the upstart capital, right? Even though they have that contract, they don't have a ton of revenue. They haven't been in business a long time. Sean, going back to your point, they don't have a big bank account and a ton of collateral. But she needed $60,000, right, to really get this thing started. And kind of sitting down with her and determining, originally she came to us and was looking at $40,000 and making the determination and kind of helping her out. We determined that, she's really going to need 60, right? But she was a sub 600 credit score, right? She had some struggles in that area, had been a single mother for a long time before getting married. And so ultimately we were able to go through the process. We were able to, we had a comfort level with the contract, and we provided her the $60,000, and she elected to do 6 months interest only as her beginning repayment. And so completely changed the game with her. That's just an example. But, again, there was really no place that she could go. And she got that money at 7%, right? 60,000 at 7%. I believe we did like a 5-year amortization on it, or 5-year term. So she got it at everyone agreed to be really good terms for someone that's starting out, right? Starting out her business. I mean, her business is just about a year old, very little to no revenue. I mean, it checks all the boxes for the bank to be able to say no, right? But we said yes. And so, she'll always remember that even after she fulfills this contract and she's up the 577,000, she's always going to remember that. And so going back to Sean's point of, kind of who's in the foxhole with you when you're starting out, is very important. And that's important to us. So as we're going through this, can you guys still hear me?
Yes.
All right. Perfect.
Yeah, I got you.
Yeah, perfect. No, thank you. What I always look to do though with that was just one story example. We work across many different industries, but Again, I want to open the floor, and Sean, if you got some more thoughts, or Carolyn or Kimberly. Hey, Dominica, how you doing?
I'm
Right.
fantastic. Love to be here. It's been absolutely busy past couple days, but always great.
Yeah, no, it's great to have you here. I appreciate you stopping by. And what we're talking about is kind of, I'm looking for some thoughts and ideas on how to improve our loan application process. Just to improve that, to make it a better experience for people, especially for small business owners, but even on the personal side as well. And so I was sharing kind of an example of that, and Sean shared some thoughts around the importance of financial institutions being there and being partners with business owners in their early days, as opposed to wait until they're doing very well and then come knocking on their door, which that's easy at that point, right? But the people that are there for you in the beginning, it's always a good thing. So I just want to open the floor. Any thoughts around the loan application process? Maybe some of your experiences, good or bad or ugly. I'd love to hear from you.
Well, Ryan, I don't have a business, so I would not be able to contribute, but we did just build a house, and, we had to take out a loan for that. I don't know if you would want to know anything about that.
Absolutely, Carolyn. Please go ahead. I'd love to hear it.
Okay. Well, it was a very easy process for us. We applied at the local bank here in our new city, and we had good credit scores. So they used Stockton Mortgage, and that's who they try to use for all of their home loans. And you have in your title about the pools, the credit pools. Since we did have the good score, they only had to go through them, and we did get approved. And it was a very quick process. The only slow situation was the appraisal, getting that back. And it usually it takes 3 to 5 days, and it took almost 2 weeks.
Oh, wow.
So, yeah, that was the bad experience about it. And we did not have the contractor finish the basement because, of course, they weren't able to include that square footage in the price of the home. So now we have taken out a loan. I don't know what it's called when you have equity in your house.
Yeah, like a home equity line of credit or something like that.
Yeah.
Yeah.
Yes, a equity line of credit, and that's what we're using to finish the basement.
So gotcha. Good. Well, no, I appreciate you sharing that experience. It sounded like it was pretty streamlined for you. Obviously you had the strong profile that made it attractive for the bank. Let me ask you, Carolyn, and you don't have to answer this if you don't want to. Has that always kind of been the case for you and that sort of thing around having a really good credit profile? Of course, yeah, I work in a space where people have a lot of challenges with that. And so I'm curious, is that something that's always kind of been for you, or is that something you've really had to work on over some time?
Actually, when we bought our first home, we've purchased, this one makes our third home. The first one was a little bit hard because we had never owned a home before, but I did know probably 2 years prior to us applying for a home loan, I was working diligently on getting credit cards paid off, and things like that to help boost our credit scores. So I believe we had to pay a high percentage rate because our credit scores were not the best in the world. And so therefore, by doing what we did, it helped us get in easier, but we did have a higher interest rate, which of course equaled a higher monthly payment for us. And then in the second home, we had built our scores back up. And so, yeah, the first one was not easy.
Yeah, absolutely. And, let me ask you also in terms of the actual process of applying, was it paper application? Did you feel like you had to, give the same information over and over again? Kind of talk to me and maybe compare and contrast your most recent, what you described with the mortgage company, with your recent build to, kind of that first purchase. Was there big differences in the application process and, again, the information you had to provide?
All three of them were paper. And yes, it was like we were writing a book with all the paperwork. But you consider too, we are from a small town, and then this town is even smaller than where we bought our first home. So I don't think that they are up on the modern technology to have the computer process to make it easier for us. But I do remember on the first home, they did have to do several credit checks for different companies because I guess, we weren't a good candidate to have a loan from the first place like we were this time. And I was concerned, both my husband and I, that since they were having to go and check through other banks, that it would hurt our credit score. I don't remember if it did lower it or not. But are they called soft checks, or are they actually hard checks when banks look for your credit scores?
Yeah, no, actually, most of the kind of banks and when they broker it out and that sort of thing, traditionally they would do kind of hard credit pools. I know a lot of institutions now have kind of gone to like an initial soft pool. That's what we do. We do an initial soft pool so it doesn't create an inquiry. And the reason for that is we're dealing with people who already have kind of challenged profiles already that need kind of a restoration. We don't want to pile on, right? And so also, I don't like to be pulling things like that till we know we're going to do business, right? So if we haven't made a decision on the application, I don't like to send someone, where we're declining their application and we created an inquiry. So we like to do kind of the soft pull. So we don't really do a hard pull until we've decided we're going to do the loan, basically. So, but no, go ahead, Carolyn.
Well, that is good, especially, for first time home buyers. And perhaps, they are younger and they don't have a lot of credit yet. By having the softer pulls, that wouldn't take their scores down. But the bank for our first home, they were able to help us with the loan, but they went through several other attempts. And then finally they just said, yeah, we'll take a risk because it is a small town. They knew us, they knew our parents. And I think it's good that you can do that soft pulls for younger couples buying their first home.
Yeah, no, absolutely. So, Carolyn, I appreciate you sharing kind of your experience with that and your transparency. And that's you're actually at a point where we worked and strive to try to get people, which is if we can provide that kind of initial kind of injection of capital, albeit in our case in a business, but it's to be able to help them do that, so then they can also kind of have that cascade to do what you just did, Carolyn, which is be able to buy a house if they desire to do so, or even build if they have a desire to do that as well. And so that's where, from the economic development standpoint, we feel in our mission, we're able to help edify and build the community is kind of through that provision of capital and be able to provide that for small business owners when they have great ideas and they're committed to wanting to see it work. We want to be able to be that partner. And listen, we don't try to hoard that. I mean, ideally, people, quote unquote, graduate from us and they are able to go to the bank, and then with a better profile, a little bit better established, they're able to go to the bank if they so choose. But one of the things I find, and it's kind of going back to what Sean and I were talking about, a lot of our clients find kind of this loyalty to us because we were there in the beginning to help them kind of launch, albeit given the example I gave earlier with the young lady that is getting the startup capital, and now she's going to be able to fulfill this contract. Once she fulfills that, she's likely to be at a level where she could, the banks will be calling her and she can walk in any bank and get what she wants. But there's also a good chance that she'll come back to us and say, hey, you folks, took a chance on us when really no one else would. And so we want to be able to continue to do business with you. And that's always great too. It's just part of building the relationship. But one of the things I ask from our borrowers, and like I'm asking you all, is, how can we continuously improve the process? And so, Carolyn, you mentioned about having to kind of fill out what seemed like a book. That's something that I've really taken to heart, and as we've gone online here in the last year, I think we've done a good job on it, but we want to continue to improve it. So things like, we want people to be able to give sensitive information once. Like, I don't know if anybody else, and you can then Mike and respond, but I hate when, an application where I've got to give my address 3 or 4 times or my social security number 3 or 4 times. And I got to put my name a whole bunch of times, just a bunch of redundant information. Has anybody else experienced that?
I think a lot of times, especially I know my husband, when he was, doing some of his work when we were setting up the nonprofit, it was absolutely crazy. And actually, kind of funny, I just realized that I know you spoke a little bit about it, that you do help, with how to fund your nonprofit. So I think my husband and I are going to have to make an appointment and see how smooth we can create this, because for us it was really challenging. There were details, there were things that we just didn't have it, or we couldn't provide, and we didn't have a really assistance in the matter that it was such a big company that pressed 9, 10, 12, 13 times different numbers, and you were referred to somebody else to answer that question. Hey, I don't have that. So I think that personal experience and also having the documents where you can send them virtually and that they're okay and you get the copy, it is one of the biggest challenges with financing institutions.
Yeah, Dominique, I appreciate that. That's also good thoughts in terms of the routing of the information with the application, and the ability to receive it, in of course in a secure fashion, with routing it kind of back and forth. And I think those are all things that you keep in mind. And you mentioned kind of that starting up your business or kind of that nonprofit arena. Yeah, so of course, I'm here in Memphis, in Tennessee, but I certainly can be available if you have questions or thoughts, around your kind of the startup piece of it. Of course, I was intimately involved in that part. It is a challenge. You kind of start out, you're wearing a lot of hats to begin with, and then you'll find that period, if you keep working at it and build the right relationships, where you're able to really kind of expand. One of the key things that helped us be able to expand was, really through partnerships with other organizations. Where we were able to build capacity. We're able to, have people kind of help us even on a part-time basis. Then, we started getting into, people doing more contract work for us. And then we got to a point where, we were hiring employees. So it's all in those stair step kind of pieces with business. Business is, very, very few people just get up and start running, right? Sean May can attest to this. Very few people just, if they've got a pot of gold and they've got, maybe family members that have been in business that also maybe have a pot of gold and a lot of relationships, that gap can be bridged. But for most of us, we don't have that, right? And so, it takes a little bit of time to build, and you have to have a lot of endurance and a lot of patience. But you have to have a really clear vision on what you want and not waver from that. But then you also need good partnerships. And so that's what we try to do with my company, as I was mentioning earlier. That was kind of the idea or premise behind it is, how can we be a good partner with you and do that from the beginning, right? And again, not wait till you have $10 million in revenue and then come knocking on your door. How could we be there from the start, and then how can we have a good, process as well? And so, no, I appreciate that, Dominica.
Yeah, that's great. And I do understand, Ron, and that's why I just enjoy coming in and listening, because, I'm learning. I expand and actually coach and help small business expand. That was always called kind of funny. It's a hobby almost, but that's just because, you surround yourself with like-minded people normally, right? So I was around a lot of the entrepreneur mindsets, so with people with goals to grow businesses. I've been in jewelry business, to manufacture and patent golf clubs, and also real estate. Real estate's been my strongest and the longest running business. But right now, um, we're looking, my husband and I are both in the same situation where I am here in Louisiana helping him be with his children and spend more time. But my business I was part of growing, coming into companies, helping them expand and then exiting, just kind of working behind the scenes. Now I'm thinking, I'm going to do this for me. Boston is where my heart is and my daughter is. And I like there. I know the people, and I wanted to grow my real estate team there with a broker who is really dear to my heart, and he's struggling with pancreatic cancer. And we all know it's not a longevity, so I want to help build it scale really quickly. And then my husband has the nonprofit because he's in the mental health. He's a spiritual guide, but also has a lot of people that he works with don't have the resources. It's amazing and everybody should have it. Or people don't want it to be private, especially the high profile individuals. They really don't want to talk to somebody because they think it's going to be out there, and there is still, we want to say, we're better with the stigma, but there is stigma around mental health
Sure.
and illnesses. And I feel that collaboration may be somewhere, but when you're working for somebody, it's so much easier than when you do it for yourself. And I think we came to
Definitely.
that stock point, where I have a great idea. I know I'm an executor. My husband is the, showtime lights, and he is on. But he doesn't do anything behind. Consistency and all those things are not his forte. I'm not good with people. I mean, I'm good with people, but I don't want to be with people. So I rather do behind scenes organizing and that. So we know where our weaknesses and strengths are, but how do you collaborate, and how do you suddenly come up with all the excessive amounts of funds, right, that you need to start, or how you budget? You need an expert. So collaboration with financial institution, or knowing how to fund it, things, even with my expertise and many people that I have, we don't have it. So I look forward to learning more. And I know you had last time Dr. Brown, I want to say, Gray.
Yeah, Dr.
Gray.
Gray. Yeah.
Yeah, she was amazing. So, the resources that we have here, because you're bringing these amazing people, are just spectacular.
Yeah. Well, Dominic, one, thank you for those kind words. And then, also, you know, yeah, I chuckled some when you mentioned, it's kind of easier to work for somebody than have your business. I can't tell you how many times, I've said to myself or said to my wife, especially more so in those early days when, not really taking much of any salary and, that sort of thing. And I'm thinking back to, some of those bank salaries that I had, they made for some really nice Fridays on payroll day that you miss a lot of times, particularly if you go into full-time entrepreneurship. Well, one of the things that's interesting that you see today is a lot of our borrowers, they kind of hedge a lot, right? They're in their W-2 job, and so they're leveraging that or using that as seed money to start their business, and so they've kind of bootstrapped it from there. And then they get to a point where they recognize, okay, I can take this to the next level if I could get some level of kind of capital injection. And so people get to us through kind of either word of mouth, or we do have a marketing campaign. We work with a local marketing firm that's doing some work for us around SEO, search engine optimization, and keywords, and all that type of thing to drive traffic to our website. And then I've done some podcast interviews and some interviews in the Business Journal. You can find some of that at my link at champ10k.com. But so all that stuff is kind of there, and that's kind of helped, boost our profile and again, that traffic to us. And so that's been a worthwhile investment. But again, Dominique, in those early days, it was just kind of strap up and, kind of hit the pavement, make phone calls, and again, attend meetings, build relationships. We're in community meetings. We're talking with bank partners. A lot of times they would refer people that they couldn't, underwrite or couldn't approve. They referred to us, and that sort of thing. And we were just building those relationships with foundations and some of the associations that started providing us funds that we could, that we could lend out in the fashion that we do. And then our big break was really around, really just before the pandemic. So this is years into it. We had the Kresge Foundation that gave us $1.6 million as a grant. And, then you had kind of the onset of the pandemic, and we were able to, get those funds out there at a time when the government shut everything down. And as a result, none of the businesses in our portfolio closed. And so, we're very proud of that. But in that partnership, that's really helped grow our profiles. And so through the pandemic, we've been able to increase our fundraising, really tenfold. And it's really been good. So we're on a nice trajectory now. And the CDFI space is getting a lot more attention. But there were some very lean years, and I was still in my banking career as we were doing some of that, so I was able to kind of hedge some ways that way myself. But eventually, of course, I had to get into it full fledged, which I did in 2018 when I was laid off, and so January 4th, 2018 at 3:45 p.m. to be exact. Was kind of the end of banking career and really the start of me full time at River City Capital. So, anyway, no, good stuff.
Not wonderful that you got laid off, but it's how amazing how when you take that kind of situation and turn it into an opportunity, and how much more you give back as well as create because of that. It's just amazing. I just love hearing that. It's motivational, and it's for us because of my husband being in that space as a doctor. He is, and that's what we've been doing, but he also has 3 kids. And the time is limited. And like I said, some people are really good with doing stuff, and I feel that having organization that is not really defined or to what you do, or like going back to what you were talking about, loan process. I would love to get some funds in it where we can have organized meetings, do more community events, things, because in Louisiana, I mean, we are in a place where there is a mental health crisis, and we can do a lot, especially with my husband's expertise in addiction. That is something that we can thrive. But really filling up the applications, going through the process, my husband is not going to provide you anything. He's not capable. He doesn't have a program that you can say, oh, show me your program. What do you do? He doesn't. And, we have to hire somebody because he's not going to do it. It's in his head. And, so we have to, we went through a struggle just getting ebook. And that was, I wanted to do it, but that created a conflict in our family because sometimes, we're not really kind with the ones that we're at home. We take it for granted a lot. And it goes, in both of us, we assume or we feel it's another level of challenge, when you're working with your spouse. And I'm a tyrant, I'm relentless.
No,
I love
you're
working.
a tyrant, Dominica? Is that what you said?
I love it. Yes, I absolutely. I'm relentless. I don't get tired. I love business. For me, real estate, in it's and everything that I do is a lifestyle. So
Sure.
I really love what I do. I don't have a bad day at work. I might have a challenge at work, but I don't have a bad day. My husband comes exhausted because he's dealing with people, with their minds, with their well-being, with their and it, another funny thing about it. he can't share it. He can say it was exhausting, but he's got to keep it. So um, the challenge of what he's going to be willing to do to provide it, to say, hey, Mr. Linder or so and so, we have this great concept. This is what I do. There's 5, 6 people. I saved their lives. 20 people said they would come back and do this with me, but I can't get it because I have to resource somewhere to hire somebody to do my business plan and all of this, and I don't have truly the resources financially, but I can do it because they're asking. So the challenges with businesses, I think, is when a business is so unique or there is a real talent, a
Mm-hmm.
lot of times I believe it's not backed up. I have a girlfriend who's been for 5 years trying, because I do the pitch decks, for a lot of people. I put them together and all that. So she's rehabilitated herself, or created an amazing product that a lot of companies, is all the sports that we would be so happy to use this. We're going to sell it. She hired a marketing company, cost her everything, borrowed money from all of us, from friends and family, exceeded that at 5 years mark. Nobody wants to give her money, and she's not spots, where you need to manufacture, you need to be able to do certain things. She named all the things, done all the business, but stuck because you don't have sales,
Mm.
right?
Right. Yeah. Those, again, it's that early process is that early grind. Like you were just kind of describing, and you touched on something that, all of us as owners, we have different skill sets that we're stronger in than others. And so that's kind of what you use as the basis when you're looking to partner. You look to kind of, help offset some of your weaknesses. Like you mentioned with your husband and kind of some other things. So no, that's some good things, Dominica, just around, just that importance of those, particularly those early days in business where, again, you've got to put a lot of grunt work in, to say the least. So no, thank you for that. I saw that Sean jumped off. So I kind of want to start to wrap this up because you guys have given me some great feedback. One of the takeaways that I look at for the improving the loan application process is one, kind of providing the borrower with kind of the full kind of list of what's needed. And Carolyn, I don't know if you ran into this when applying for your mortgages, but some of the frustration that you'll see with people is when the bank or the mortgage company is constantly asking you for more stuff. Like you provide stuff and then they come back and say, well, we need this and well, we need that. We need, you gave us 2020. We need 2019. Oh, you gave us 2019. We need 2021. Yeah, did you run into any of that, Carolyn?
No, not really. But you did mention that you hope that your first time borrowers will come back to you the next time.
Yes.
And we were so pleased with our bank on the first home that we purchased. We went ahead and purchased our second one through them as well. And I tell you why, because we were in a situation where my husband had a surgery, had some minor complications, and his work did pay him half pay.
Yeah.
However, I had to take off work as well, and at that time, I was the primary breadwinner, so to speak. And luckily, I was a management consultant, so I was able to take the time off. And the reason I'm sharing that is because the bank worked with us and allowed us to skip a payment, a mortgage payment. Now, they put it on the end of our note. So that was probably advantageous to them, for the, what do you call it, principal that they are not principal, but however it would be, it was good for them, I'm sure.
Sure.
But they taught us how to not let that happen again. And they told us, through our insurance company to purchase mortgage insurance. So that would never happen to us again, because when you do have the mortgage insurance, then it will make your mortgage payment for you. Now, of course, it costs, money monthly to have that. And we haven't had to use it since. However, it's a good peace of mind. And, they taught us that. And so we really appreciated it. And they also taught us that it's a good idea to set up automatic payments.
Sure.
That's going to, one, help make sure that that you're not late and it damage your credit score. So yeah, they taught us a lot as a first time buyer. And so we did go back to them the second time. We would have the third time. However, we did move to, like I said, a new city. So I think good customer service is important to keep your borrowers coming back to you.
Absolutely. No, that's a great point that you made. One, I appreciate you sharing your story there, Carolyn, but that's a great point. Even when you get into all the minutia of the application, a lot of times just that basic, kind of old school service, right? Being available, being attentive, providing, recommendations that are meaningful and applicable to the situation and to the particular borrower. And just, showing, that level of respect and availability, doing what you say you're going to do, being truthful, right? Operating with integrity, operating, within the legalities, right, that are established. I think doing all those things and being, what I like to, kind of define as being crisp, right? Having a good, crisp process, right? Where it's understood, the things that need to be disclosed are properly disclosed and explained. They're not rushed, but then also moving, kind of expeditiously through the process, based on the borrower's needs. Because sometimes, as a borrower, sometimes you need to move fairly quick. Other times you may not need to move quite as quick, right? And so as a lender, and financial institution, being able to adapt to that, based on those needs, I think is really crucial to, as Carolyn mentioned, I guess influencing your borrower and compelling your borrower to come back to you, right, and be able to do business with you again. And that's one of the best ways to establish relationships. So no, that's really good stuff there. Go ahead. Did somebody have something or? Okay. No, I thought I heard somebody, but, no, we're here. The Breakout Power Hour special edition we did today. So it's not our normal day, but I appreciate everybody rocking with us. I appreciate those that are on the Minding Your Business podcast that are listening, and definitely share this room, and share this podcast out with people that you think will benefit. Go ahead, Carolyn. I'm sorry.
Okay. I couldn't hear you. Dominica, could you hear him for a little bit?
Yeah, I had no problem, Caroline. Maybe signal.
Oh, Carolyn, sounds like you are in the matrix a little bit.
Disadvantage.
Oh, there you go.
Was my husband got paid twice a month, and and so we split the mortgage payment, or excuse me, we held the first part of the loan payment from one paycheck to add it to the second paycheck, and then make our mortgage payment. But
Okay.
they told us not do that. And by not doing it, if we would go ahead and pay half of it when he got his first check, that would help cut down on the time of our loan. So I was very impressed with that. And again, that's just the bank teaching us. And that's another reason why we did go back to the original first loan to the same bank.
Right. So Carolyn, when you're sharing that, and I'm thinking through, right, because I think that's a powerful piece when you talk about service, particularly in the loan process, right? Take away even just the application process, which is what I came to talk about today, but just that whole process of then how the financial institution instills developing the relationship with you. And one of the ways they do that was all the things that we just talked about, but then, kind of that education piece. And as you notice, that education that they provided, Carolyn, was really kind of custom tailored to them, to their situation. It wasn't this cookie cutter kind of, thing that they tell every single person that walks in the door, right? It was custom tailored to their needs.
Yes.
Yeah, no. See, and that's why I love, and so that's a great takeaway. Even when we're thinking about the application process, it's, how do we custom tailor education? So one of the ways that we do that is, from time to time we have workshops, whether virtually or in person, where we're able to help. And my portfolio manager, Amelia, she's tremendous at doing this. Being able to share and kind of walk people through, kind of the actual process, and then have a conversation with them about, kind of what their needs are, or what's the most optimal way to handle the business. And so we do some of that, whether it's like Carolyn was mentioned with, here's a way to make the payments. I mean, we talk to people about, hey, we may need to adjust your payment date. Things have changed. Maybe hours have been cut. Maybe a job's been lost. Maybe there's a health issue. Maybe there's something that's impacted the business, right? That maybe was unforeseen or whatever it is. And so talking with people and saying, well, hey, maybe the 15th is not the best day for us to draft your payment. What if we did that on the 20th? Would that be better? Right. And so it's talking through and kind of having those kind of customized conversations around a person's, individual situation. And then once you come to an agreement on that, then it's executing on it. Right. And so, Carolyn, now I appreciate you sharing that, definitely. And hey, Beth.
Hey, Ron, what's up?
Hey, what's up?
I'm listening.
Yeah,
So,
no.
sorry, I just got in here. You guys are going through the loan process?
Yeah, no, we are. So yeah, we've just been more just kind of talking about, we've had a few people come through the room, and Carolyn and Dominique have both shared great stuff, and Sean did earlier. But really what we're talking about, Beth, is kind of that, the experience around the loan application process. I'm working with my team constantly on how we improve that as it relates to how we lend to small business owners. But, I was interested in people's experiences when they've borrowed money, whether for their business or personally, and what that experience looks like, what you liked about it, what you didn't like about it, what you love to see changed. And I'd love to be able to take that information as we're kind of improving ours. So I'd like to open the floor up to you if you have any thoughts around that. Hey, Beth, you still there?
Yeah, I'm sorry.
Oh, no, it's okay. No, it's okay.
I'm just standing here counting money. I can't stand my cash to be uneven, like it needs to be. I have to have it all lined up correctly.
Yeah.
Like that. But yeah, as far as a business getting a loan, it would depend on what type of business, I guess, that you're asking me about. But, I only have certain banks here. Local lenders aren't willing to do, we have a lot of new construction.
Yeah.
So they aren't willing to do new construction loans. So we know a handful of banks that, hold on one second.
Yeah, go ahead.
Yeah, we have a couple local banks that will write new construction loans. And when I say new construction loans, you know what I mean, where you can pull a draw from it.
Right.
Right. But I do have local lenders that brokerage out, sorry, now I'm opening up my garage.
That's all good. No, it's all good. We get the real life deal today, even with the garage door opening, which I have that happen all the time as well. So,
yeah, and I guess one of my kids smashed a thing of paper towels underneath my garage door. But yeah, I didn't get to hear exactly everything y'all were talking about. But the one thing I find, though, in real estate is that, a lot of folks haven't bought new homes. They haven't bought homes in 10, 15 years. Everything's changed.
Yeah.
And then they call and they're very frustrated, right? They're like, well, why do we have to give the lender this information? Why do they need that? I'm like, look, if they didn't ask for the blood from your firstborn child, you're good.
Yeah.
Just give them what they want and move on, right?
Yeah, yeah, no, I mean, no doubt about it. And Beth, one of the things, and I mentioned this earlier, which was, you know, as best as possible, financial institutions, and we look to do this is, I think one of the areas that can help is, financial institutions and banks, mortgage companies, providing the borrower with kind of that, full list of what they're going to need. Understanding that can change from borrower to borrower, of course, but for the most part, the financial institutions tend to know kind of the documents that they need. And so a frustrating point that I've always seen has been when, the institution's constantly coming back asking for this, asking for that. And it's like, why don't you just give me a list of everything you need, right? So that I can get that all to you in one swoop and then go from there versus kind of this, constant interruption of kind of piecemealing, kind of back and forth. And I get it, but that's, one of the, I guess, frustration points that has been, expressed, not here in this conversation, but just I've heard over the years. So not sure if you got any thoughts on that, Beth. While Beth's counting her money. Hey, Beth, you still there? Beth might have had to step away for just a minute, but no, we'll definitely continue. And then Beth, feel free to jump in at any time. Feel free to interrupt me. But yeah, I think one of the things that as a takeaway is improving, the initial kind of, I guess list of things that are, are required, making sure that, people have that so they can get it to you. And then hopefully that should streamline the process once you have everything that you need and you're not kind of like piecemealing it together. That can streamline getting the application decision. So everything that I've always looked to do is, how can I get the essential information that I need to get to an application decision, either an approval or a decline? That's what we're trying to get to as expeditiously as possible and as painless as possible, right? And we talked earlier about doing the soft credit pool, so I can get a sense of what that piece looks like. One of the things that we've gone away from a lot is, kind of doing all these calculated ratios and quick ratio and all this type of stuff, debt service coverage. And really just you look at, okay, what is the information that I need to determine if we're going to the dance or not, right? And so that's what I try to get to, because I've always been of the mind that, and even this as a borrower myself at times, I've always been of the mindset that if we're going to do it, let me know as quick as possible. And if we're not going to do it, let me know as quick as possible. Right? Like don't just torture people. Give them a quick death in battle if you're going to decline the application. Right? So then that way they don't waste time, right? Because time's so valuable. They don't waste time on something that's just not going to be there. They can explore alternatives. Right? And so, when I look at our application process, I'm looking at, okay, can I gather the necessary information to determine, okay, do we need to continue talking? Do we, or is there an opportunity for us to do some funding? And then if it's determined that it is, then kind of go into maybe a slightly deeper dive. But that's kind of, my thing as far as improving the process and some things that I'll take away. So I see Carolyn is still on the phone. Does anybody else have any thoughts as we get close to kind of wrapping up our conversation today?
Just want to say thank you again for holding this space. And, in the process, I think Beth would have agreed, just having good relationships with those realtors that are working with and educating them on how the process is. And I think up front, I met one of the lenders that I really loved. They had a no negotiables will be asking for upfront list that if the borrower was not comfortable to work with that, it just eliminated that hassle and aggravation. So just non-negotiable things that will be asked for, things that you can't change, and then customize it. But I think it sounds great, and that small boutique mortgage company that can educate the borrower. I think it's what we really need because our children go through schools, and my daughter, brilliant young lady, 28, was buying her first home over last summer, and she was absolutely clueless. So educating maybe that non-negotiable list up front is something that could really help a lot of us.
Yeah, no, absolutely. One, congratulations to you all's daughter, you and your husband's daughter, on her purchase. That's definitely awesome. Love to hear that. Anytime that you're able to purchase an asset, that's great. And I never take that for granted, even though I've done it dozens of times. I never take that for granted. So no, that's completely awesome. And yeah, I think that's a good point. Of an opportunity is that kind of non-negotiable list, Dominica, that institutions can provide. And so I've taken that down as a note that I'm gonna go back with team next week and kind of see what that looks like and how we can properly disclose that so that people know that on the front end. They know exactly what we're going to ask for. They can make sure to gather it, so then that way when they apply, again, they're ready with what is going to be needed, and we can kind of go from there and look to get stuff done. So again, the idea of this is to get to hopefully a yes, right? That's what you want to get to is, we want to say yes as often as possible. And so again, what allows us to do that? And so, matter of fact, just before I opened this room, I sent, I did a revision in Excel of underwriting kind of scorecard sheet. And, the fintech, Loanwell, shout out to them. They're out in the Raleigh-Durham, North Carolina area. They power our loan origination software. And so we'll be having conversations around that update that I sent them, which is really to streamline the underwriting process. So once we get to a point where we're going to start underwriting the loan and we've got this information, what do we need to be able to do that, right? And again, how can we cut out the fluff, right? Kind of trim the fat with it and then have as good a process as possible. So again, thank you so much, Dominica, for your thoughts. Carolyn, Beth, any additional thoughts before we kind of wrap up? All right. If not, no, I appreciate you all jumping in. I know Beth had a lot going on, so I appreciate her insight. Carolyn, I appreciate your insight and your transparency in sharing your story. And then Dominica, I appreciate you sharing your story and your transparency as well. And then just all of your insight. I've taken down several notes and some things that I'm going to go back and help us be a little bit better at River City Capital here in Memphis. And hopefully those of you that are listening to this, whether on the replay on BreakOut or on the podcast, the Minding Your Business podcast, hopefully you shared this and maybe you were inspired from something that you heard today that can help the process be a little bit better. If you're typically a borrower and you want to share this with your finance company or institution or whoever you do business with to get funding to help improve their process, by all means, please do so. So anyway, we're going to get out of here. There are other rooms going to be going on if you're here on BreakOut. So definitely get into that. Go support some of the other rooms. Since this is fall break, I have taken some time away from my team. So I'm here with my girls. So I'm going to definitely enjoy the hell out of that, which I love to do until my wife gets back home. And then, she's just going to add to the fun even more. But definitely do that. Even with all this business talk, definitely make sure to spend time with the ones that you love, because time is just so precious. So anyway, we're going to get out of here. Thank you so much to Beth. Thank you, Carolyn, Dominica, Sean, everyone that's been in today. Definitely appreciate it. And enjoy the rest of your day. Faith Evans, Love Like This.
Now that we have come to be.
Listen, everyone, go be great. Enjoy the rest of your day. Remember, there's 3 things that unite us all. We all want to be a little bit better for ourselves, a little bit better for our families, and a little bit better for our communities. And if we can keep those 3 things in mind with everybody that we meet, we'll all make this place just a little bit better. Go enjoy the hell out of it. Let's go.
I'm so amazed that you are mine. Yeah, 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 yeah. If we can work together, maybe this can last forever.
All right. Take care, peeps.